Vikas Khemani, Chief Executive Officer of Edelweiss Securities, joins us live from his Mumbai office for a quick fundamental check. Vikas, good morning and great to have you back. Vikas, contrary to popular belief, last couple of days have been quite exciting for Indian markets. In quick time, Nifty has appreciated by about 4% from the recent low. So what is fueling this constructive price action?
I think Nikunj, as we are seeing, at least what we believe that most of the activity seems to be around building the belief in the political outcome, and I think some of the surveys have come about, and incrementally I think there's a belief of a strong political sort of outcome in getting built in the market, albeit in a slow and steady manner. So I think that is what is being explained, and also. No major, once this result season is over, no major event is expected, your vote is over. So all major events from local perspective are kind of out of the way. So I think from here on, as and when we see consensus building or expectation building around the political outcome, you will see this kind of movement, and that's when I believe that probably there might be a pre-election rally from here on as well. Because I think markets are really waiting for good sort of government to come in place, especially from the foreign institutional investors perspective, and I do feel that there will be a good follow-through buying also coming in as and when the good government comes in place. So I think that is what probably I would say, though I think one should not attach too much to it, because I think the activity has been on very light volumes. We need to still see sustaining for long term. So I think, but I would say probably that is a broad kind of indication we are getting. But let's see how it pans out before till from here to election.
Vikas, stay with us. Lots more to chat about, but I'm going to quickly go across to Mitesh Thakur and get in some trading ideas as well. Mitesh?
Yeah, I have a buy on Sonata Software with a stop at 46.5 for targets of 56. L&T Finance is a buy with a stop at 72, and traders should look for targets of around 82 over here. Crompton Greaves is a buy with a stop at 122 for targets of 133, and a buy on Gas Authority, which is a conditional buy. So buy above 366, keep a stop below 359.75, and look for targets of 380.
Okay, let's recap as well what Sandeep and Ashwini have been recommending, and let's quickly tell you what Ashwini is doing this morning, and here are his top ideas. Muthoot Finance, which is a buy call for him, L&T Finance, Supreme Industries, Infosys, HDFC and Persistent Systems. Sandeep Agle then are all buys on Voltas, Axis Bank, Lupin and L&T Finance.
Let's get you one idea each from our technical experts. Ashwini, what is your number one idea for the day?
Well, I think Muthoot Finance is a buy with a stop of 158, target of 174.
Mitesh, what about you?
I'll choose a Voltas to buy with a stop at 124 for targets around 138. It's made a fresh price high.
Voltas from Mitesh, Muthoot Finance from Ashwini. 10 seconds to go. We have woken up to a good set of global cues, and the big talking point this Tuesday morning is that now that Nifty is closed above 6150, will the short-term trend also change and have markets genuinely turn the corner? A close above 6150 yesterday, a start above 6200 today, 6209 for the Nifty, which is not a bad start considering where we were about a week ago. This is the expiry week, so obviously there could be a flavor of short covering and some portfolio adjustment also, which could be at play. But for the moment, things are looking strong for benchmark indices, 86 points up for the Sensex. Now, I'm just going to race our viewers through the big higher flyers and which are the stocks which are really moving up and down in the Nifty. So let's start with the absolute gainers now. Ambuja Cement up by about 2 rupees. IndusInd Bank late mover, but a mover nevertheless. 5 rupees up for IndusInd Bank. NTPC got completely decimated. That stock decimated yesterday by more than 11%. 118 rupees for NTPC. ICICI Bank 1047. Axis Bank, which has been a prime mover in last 5 days, up 10%. That one is also off to a good start, 1243. Let me just scan through the losers now, and not a whole lot of losers. Dr. Reddy down 13 rupees, Ranback Seed down 4, and then you got Gale, which is down by about 1 rupee. So the breadth is positive, banks are looking strong, and there is plenty of follow buying for capital goods as a group.
Oh yes, capital goods is holding out. I just want to see what Alstom as well is up to, considering Alstom-led consortium has got a 262 crore rupee order for a hydropower plant in Georgia. So Alstom TNT, that stock is holding up by about almost 1.5%. Nikunj was just talking about Tata Power, and you have Tata Power, which is going to be mulling fundraising plans come Thursday. And Tata Power has started off a little quiet after a good gap up yesterday, which really got maintained. Gujarat Gas, the board has now granted an in principle OK to consolidation plans, and they've okayed the merger of the company with 4 other companies. So watch out for what Gujarat Gas does in trade. It started off in the green, 2.25% up in the green is where this stock is. Meantime, L&T Infra Company, they've got a 2,000 crore rupee order from Canada Pension Plan Investment Board. Watch out for this one as well. Bhushan Steel is in now talks with SBI-led consortium for about a 7,000 crore rupee loan. And Reliance Industries KGD6 partners BP and Nico Resources may have to sell gas at the current rate of $4.2 per unit from April 1st. That's something you read first in the Economic Times this morning. And LIC, by the way, has called Unitech a willful defaulter. This again is what you read in one of the newspapers this morning. So let's see what Unitech as well is up to. No move there really. It's still status quo. 12.30 thereabouts is where that stock is as we speak. But Vikas, I just want to get back to the point that you were making as to how flows into our markets are getting fairly lethargic. There is clearly any lack of triggers from now up until the elections. What's the sense that you're getting, that we'll continue to be range bound because there are no triggers that the market could take lead from?
Absolutely. I think in absence of any triggers and fact that we have a big political event which is going to be sort of considered as a game-changing event, I think investors are sort of right now in two minds, or one is not sure what to play. So as and when you see some sort of surveys coming out which builds sort of conviction towards the outcome, some flows trickle in, but I don't think people are going to make a big call before the actual result outcome happens, because I think we have seen many times surprises coming on the election outcome, and one cannot be very sure till the time it is done. And also politics is such that any development can happen from now to actual election. So I think this period would be fairly sort of range bound, unless some momentum towards political bill. So as I said that earlier, that if sort of conviction starts building closer to the election, that there are no more big uncertainties left, then I think probably investors, there might be a pre-election rally, but very difficult to kind of predict at this point in time. So hence you will find volumes very low, actions very low, I think flows also being muted. But I do feel that election outcome, if let's say comes in a positive manner, a decisive government comes in, then you will see foreigners sort of going overweight on India in a meaningful manner.
Because, but some would argue that India is already a crowded trade. If I just map the kind of flows Indian markets have gotten last 1 year, we've got disproportionate amount of inflows. If I map the absolute benchmark indices, how they've done, we are clearly outperforming China and other emerging markets. Do you think the risk for India is that it is already an overcrowded trade?
I do not think so, that Nikunj, that it is an overcrowded trade, because I think all these flows have come amid uncertainty. So it's not that there was a huge amount of conviction around India. So there are a lot of investors who are very, very long term, who understand Indian markets very well, who understand Indian sort of structure very well. Some of them have sort of come in India and put in serious amount of money in last 12 months specifically. But I would say still there is a very large amount of money who is still unconvinced about or does not want to take a risk of a big political event. So I do not think that India is still sort of a crowded trade. If let us say we get a good political outcome, and I think GDP growth resumes, and I think so also some of the macro issues which are worrying us right now sort of gets started settling down, and interest rate starts coming down, inflation starts coming down, I do feel that we might see a big structural flow coming towards India in next couple of years. Obviously there will be periods of up and down when there will be trading in and out that people will do. I am not making that there won't be corrections, but I do feel that India can structurally receive 15 to 20 billion dollar flows into equities, and I do see that pace getting accelerated post election. I mean, in the first half of this year we haven't got any meaningful flows, while we got last year very good amount of flows, and I think the reason could be this impending event. But I do feel that you will see flows coming into Indian equity markets from the international investors going forward.
So Vikas, what happens from now up until the elections? As slowly and surely we start getting, clarity on which way the wave is going and whether or not it's a pro or anti-growth government. Do you think the markets from now up until any signs of, a strong government on the top comes in, the markets would just be in a consolidation move? And is there a chance of a pre-poll rally that the markets could see?
So are you asking if there could be pre-poll rally?
Yes.
So I missed your question, Aisha. No, as I said that I think definitely there could be possibility as and when the conviction starts getting built, because I think one is not sure what kind of events can pan out in politics. Any event can happen before election which could swing emotions either side. So one is not sure. So I think probably maybe just around the election, if possibility of those events going down and more conviction gets built around the election outcome, one would let the time pass. And I think see as we get closer to the election, you will start seeing that building. And also I think even in this time also, in my opinion, investors are sort of right now buying stocks where the risk reward still is in favor. Assuming that even if, let us say, not so great outcome comes in, you will still sort of be better off if the economic growth picks up from here. So on those sectors, those stocks, some amount of risk taking is getting built, but that is again a very slow and small manner. One can't say that it's a big trend, but that is already happening, and that trend I see continuing, and that trend can accelerate as we get closer to the election, and which could drive the index as well.
Well, the one space which held out yesterday was definitely cap goods. And Vikas, you too have talked about in your earlier interactions as to how you're betting on capital goods as a space, and purely, in hope of a strong government at the top and how it's going to revive the economics as well. What is it that you're liking about cap goods, and what could be the, rationale behind investing right now?
Our thinking has been the capital formation in the country has been I think probably multi-decade low, and I think country of this size and given our problem, we need revival of the capital expenditure urgently. And I think, let's say there could be two scenarios. One could be very strong government. I think there will be significant acceleration on this aspect. Secondly, slightly weaker government, still there will be acceleration in the capital expenditure. I think we cannot continue to go on like this without having significant capital expenditure reviving. So I think our expectation is that capital expenditure in the country will revive from moderate to high pace, depending on what kind of government comes out. So hence we are kind of saying that while yes, election will have an impact, but without that also you will see a big sort of growth happening in the capital expenditure side. And if that is the case, then I think stocks are right now trading reasonably good value, and I think you will see growth happening. You will see order book getting accreted. You will see operating leverage kicking in. All these stocks are right now, while looking expensively trading, but at a depressed earning. So once the operating leverage kicks in, you will start seeing they will start appearing kind of cheaper, and you will start seeing investors coming and sort of buying in. So we do feel that capital goods sector will see significant earnings growth in next 2 to 3 years time, and there is significant operating leverage which is also waiting to kick in. So and then there are stock specific arguments in each of those names. So I think if you look at, we feel that risk reward of investing in this sector is still in your favor, and if a favorable political outcome comes in, then you can kind of make a big money on that, and that has been our thought process.
But would you advise sticking to the blue chips, the L&Ts, BHELs of the world?
So our favorite picks have been, L&T, Thermax, and some of the, Cummins, and, some of those names which are, high quality, where there's a significant investment has gone, organizations have become stronger, and they are ready to capture sort of operating leverage as and when the environment changes.
Okay, Aurobindo Pharma is bouncing back, 494 rupees for Aurobindo Pharma. This is one stock which has done well irrespective of the market environment, almost at 500 now. It went past 500 couple of days ago, corrected, but today it is bouncing back, 493 rupees for Aurobindo Pharma. Because I must confess that I am a big follower and fan of your Braveheart series. So you got to buy on L&T, you got to buy on Bharti, and you got to buy on Reliance. Now L&T has worked, but Bharti and Reliance have not worked. Are you still a believer that Bharti and Reliance offer good value and reasonable upside in coming quarters?
See, I think the calls which have been taken are from a fairly long-term perspective, and from where they have been taken, still, if you look at Bharti and Reliance, both have worked from there. I mean, they are already up. I don't know exactly, but between 10 to 20% depending on which stock you're talking about. So I think they are still already serving. If you were to look at from a 12 months perspective, but our call has been, I think, slightly longer, 2 to 3 years perspective. If you can, overlook the current uncertainty. While we are slightly disappointed on the developments in how it has gone about on the Bharti, it has gone kind of somehow on certain aspect it has disappointed. But I think we still sort of believe that from a longer term perspective it offers an upside. Reliance is the one stock we think, if you again look at from slightly longer term perspective, where the petrochemical margins will revive, gas uncertainty I think is sort of getting sorted out, and also on the retail side you are seeing them sort of breaking even and coming out stronger. So we do feel that you will see value creation in the stock, and so we remain committed. I do not know how they will perform in next 1 or 2 quarters. One cannot really look at from that perspective. That is not the objective of the Brevard series. But I think still we are kind of invested into them, are backing those stocks under our series.
Because what makes you like banking and financial services? Do you not believe that asset quality stress is here to stay?
Absolutely, I think if you ask me, next, even if political environment changes, in my opinion, you will see next 3 to 4 quarters asset quality issue getting worsen, and I think you will see, especially from the public sector enterprises, the numbers getting worse, and I think something will have to be done. And hence I think if you see, in my opinion, banking and financial services, PSU, which is almost 75% of the total market share, I think it's a big cause of worry, and we do think that asset quality issue will continue to deteriorate and something needs to be done. And on the top of it, you have a capitalization issue. So that is one big worry. But here is how you look at positively. There's opportunity out here, that I think this shortage of the capital, shortage of asset quality issue, which is bogging down entire PSU sector, and also I think HR issues and manpower issue, I think also will, in my opinion, accelerate the loss of this market share in favor of private sector banks. And hence I think private sector banks will be able to, in next 3 to 4 years, capture much higher growth than the industry growth, especially players like HDFC Bank, ICICI Bank, who are very, very well sort of poised. So they are, I think, likely to get higher growth in next sort of a couple of years.
Right.
And I do feel that private sector offers much bigger opportunity than public sector bank at this point in time.
So I've got your logic for why you like private banks. Final question, and you always know that my final question is a stock specific question. Give me your favorite election stock and tell me one stock which you are happy to own right now, irrespective of the election outcome.
So I don't know what is my favorite election stock, because I don't know, one can really look at, I mean, I can tell you a basket of stock, but I don't know one stock which I can play on I definitely like, my favorite stock is HDFC Bank. I do feel that in next 5 years that stock will give 25% CAGR return, which is a very good return in this kind of market in equities. And I think from a turnaround perspective, if you were to look at, I think you could look at players like Axis Bank, ICICI Bank, or L&T, which will have a delta around the election, because I think the faith in the growth and turnaround will be much more than what it is currently. So I think probably these two stocks you could look at from an election perspective.
Okay, Vikas, good chatting with you as always, and good to have you on the show. That's the view coming in from Vikas Khemani from Edelweiss. Let's go across to Ashwini then and talk about what he's made of trades.